you go. All right, let's have a look at what's going on in the market. So Australian home values surged 8.1% in 2023. Behind the strong headline, annual gains conditions have become more diverse and generally slowed through the final months of the year. Despite the annual 8.1 increase, the year was punctuated by diversity. One of the main trends through the year has been the widening disparity in the rate of home value growth across capital cities. Capital cities have generally recorded stronger growth conditions relative to regional areas. Although housing values have risen across most regions, 2023, 5 of the 8 capitals are still recording home values below record highs. So Sydney, 0.2 for the month, 0.8 for the quarter, 11.1 for the year. Melbourne, negative 0.3 for the month, negative 0.2 for the quarter, and only 3.5 for the year in growth. Brisbane, 1% for the month, 3.7 for the quarter, 13.1 for the 12 months. Adelaide, 1.3, 3.7, 8.8. And Perth, 1.5 for the month, 5.1 for the quarter, and the record of 15.2% growth last year. Now, folks, if that's not a great thing to be phoning every single one of your sellers in Perth and telling them that last year we had a 15.1% growth, all right? Yes, listings are low. Yes, stock is hard to find, but it's got to be tempting those who were considering selling in the near future. It's gonna start tempting them to put their property on the market. So the relationships need to be built, and you need to start dangling the carrot, and stock levels will improve. Getting a photo. All right, Hobart, Darwin, and Canberra we won't talk about, but combined capital cities 0.4, 0.1, 1.5 for the quarter, 9.3 capital cities growth last year. So if you're talking whole of Australia, it's 9.3. And of course, the combined regional 4.4 for the year. Hence, we get the disparity in capital cities and regional. But the national home index, 0.4 for the month, 1.5 for the quarter, and 8.1 annually. Let's look a little bit deeper. The trends from late 2023 are pointing towards a milder outcome for housing values in early 2024, with the potential for a year of two halves. The trajectory of interest rates through 2024 will be a key factor influencing housing trends. Although another cash rate hike can't be completely ruled out, the trend towards lower inflation, weakened economic conditions amid low consumption, and a loosening labor market suggests another rate hike is looking increasingly unlikely. A reduction in cash rate target through 2024 could help to restoke demand later in the year. Stoking a housing value rebound on the back of lower interest rates is arguably an outcome that policymakers would like to avoid. Otherwise, we need to increase interest rates again. This year, the latest housing affordability report from ANZ and CoreLogic showed a worsening across every affordability metric over the first 3 quarters of the year. Based on median household income estimates and dwelling and rent values to September, the analytics shows the median dwelling value to income ratio rose 7.5%. The portion of household income required to service a new mortgage is close to a record high of 46.2%.
46 in WA?
Sorry? No, this is Australia-wide report, CoreLogic, yeah. The average household would take 10 years to accumulate a 20% deposit. And the portion of household income dedicated to rental payments rose to 31%. While growth in construction costs has eased, the government commitment to deliver a stretch target of 1.2 million well-located new homes in the next 5 years remains challenging. Although construction costs are now rising at a rate slightly below the long-run average, the cost to build a residential dwelling is not falling. The budgeting undersupply of newly built housing is likely to keep a floor under housing prices to some extent over the coming year. Additionally, there is a clear log between overseas migration and purchasing demand, with overseas migration moving through record highs last year. We're likely to see the lagged demand side impact flowing through to purchase activity over the coming years. Obviously, rentals, national rents were up 8.3 in 2023, a reduction from 9.5 rise recorded last year and 9.6 rise in 2021. Despite the slowdown in annual rent growth, the last year's result was still more than 4 times the pre-COVID decade average of 2% per annum. In dollar terms, the annual rise in dwelling rents equates to approximately $46 more per week based on the median rental value. While growth in units is 10.2, has outpaced the rise in houses 7.5. We've definitely seen activity on the unit side in both rental and sales in the last 2 years. We can also see some significant differences across the broad regions of the country. Perth is a clear outlier for rental growth, with house and unit rents leading the nation in 2023 with no signs of easing in the annual growth rate. Perth unit rents rose by 16.5% or approximately $80 per week on the median value over the year, while housing rents were up 12.9 on roughly $73 per week. Rental growth across the combined regional areas of Australia slowed to 4.3 in 2023. So obviously we have a very buoyant rental market, especially in Perth. If you see the graph, which obviously you can see on the CoreLogic website, you'll see that Perth's annual change in rents has skyrocketed, and for units and houses, and it's leading with houses 12.9% growth and units 16.5%. It's quite a contrast. Hobart's is the lowest with negative 3.5% in housing and negative 3.3% in units. So it's a massive disparity, with Perth outperforming the rest of the country. Let's have a quick look at New Zealand. Hot off the heels of October, 0.4% rise in property values. The CoreLogic House Price Index shows another rise in November of 0.7. The net result is that average property values are now up by 1.1% over the past 3 months, and the annual change now sits at negative 4.5, the softest annual decline since November last year. From the peak to September 2023's trough, values fell 13.2% after the increases in October and November. Values remained 12.3% down from the high at 915,000. Signs of the emerging upturn were widespread in November. Auckland, Hamilton, Taringa, Wellington, and Christchurch all saw monthly rises. It's no real surprise to see the second monthly rise in house prices for this emerging cycle, given that mortgage rates have shown clearer signs of peaking in recent weeks. Despite some elevated volatility in global financial markets, the labor market is still relatively robust. Meanwhile, credit conditions also remain challenging, even if mortgage rates don't rise much further or even dip a bit for the longer term. Fixed rates, they're still high, and serviceability testing remains a significant hurdle too. Perth property, I've never seen them so low. We've got 2,807 houses and units combined. That is absolutely unbelievable. And we'll talk a little bit about some of the ways we can get that up. And one of the ways I'm going to talk about now is stop bloody selling off market. That is ridiculous, that trend. Are you out of your mind? Folks, we know that sellers, agents at home opens. If there's no home opens, you're not getting shopped. And if you are having home opens, you're going to be the only one. So there's going to be no shopping list. You're going to be it. You're going to get the opportunity to list so many properties. I've never seen anything more ridiculous than selling properties off market, unless there is a huge reason why, like they in palliative care or something to that effect. Okay, so please, folks, the dialogue's got to be, Jelena, I know I can sell it off market like that. In fact, I could send out one email and probably get you 5 offers. And that will get you a great price too, Jelena. However, can you just imagine if we open it to the full extent of the market? Can you just imagine? And we get, dozens of people, maybe 20 or 30, and end up dragging all those Eastern States cash buyers and so forth and so forth. Can you imagine? Yeah, we really are our own worst enemy here in little old Western Australia. But I know you're competing against every man and their dog. But don't. You are your own biggest competitor. When everybody's saying sell it off market, you guys should be recommending a 7-day auction campaign or a 10-day offers presented set date sale or something like that. We can't just follow what everybody else is doing. We've got to make our own market and be our own person. Okay, what's next? All right, so let's have a look. Okay, let's open it up. 2 people to talk about the market who hasn't already spoken. Raise your hand if you want to tell us about your market. One at a time. Who? Ash Swartz. Ash, can you hear me? If you can, unmute yourself because you are going absolutely ballistic over there.
Hey, Ryan, can you hear me?
Yes, buddy. How are you?
Yeah, good. Sorry, I got no video. Yeah, hey, guys. Hope you're all doing well and Happy New Year for 2024.
Thanks, mate. Now, Ash has clocked over to Life membership, so it's great that he's attended. Tell us what's happening in your market and what you see for 2024, my friend.
Well, I've got pretty strong predictions for 2024. It's probably the year where we're not going to see so many interest rate rises, and we had a lot of interest rate rises last year, and we still had really good growth. So I think that we could almost outperform last year in 2024. We're getting smashed with buyer inquiry, like you just said, Ryan. It's no longer an issue to sell a property. You can go into any listing presentation, knowing that if you get the listing, it's as good as sold. And there's still a lot of our vendors out there that are undereducated. They're not aware. They know the market's good now, but they still have no idea how good it can be. And we're coming across a lot of agents that are giving quick offers and underselling. And I think you just got to really push to say that this is the market where you got to expose it. And I probably never felt so justified in charging, my 3%, because we can justify that in this market. We are marketing a property. We're bringing all the buyers there and we're negotiating. And if you do that well, you can put thousands of dollars more on the table. So that's what we're seeing. Still really good numbers of investors from over East. But I think we're finding more and more local investors coming back into the market as well. They now have equity in their homes and they can start going out and purchasing. So, first home buyers are still struggling, but I think they're no longer in denial that the market's moving or that it's going to change. They now know that, this is here to stay. And if they want to get in, they got to get in ASAP. So it's good all the way around, really, Ryan.
Beautiful, mate. And how many did you sell last year, Ash?
Ooh, we've just ticked over 90 sales for the last 6 months.
So well over 150, you'd say, close to?
Yeah, it'd be about that. Yeah.
Well done, mate. Round of applause for Ash. That's massive. And how have you reacted to that? Because you've grown your team. And for those of you who are new or didn't see Ash's talk, Ash did our keynote talk, I think in October or something like that, and it was absolutely brilliant, if I do say so myself. So get onto the Google Drive and watch Ashley's talk, because he's reacted and he's expanded when he's needed to, which is going to actually carry him forward if the market drops off. So tell us what you did in the last sort of year couple, just in point form, very quickly.
Yeah, I guess we took on a lot of help. Got a lot more people working now. It actually gets easier. That's all I would say. As you do more and more deals, you really get to know where the buyers are at, especially in a market like this where it is moving so rapidly. I think one of the biggest things that I have over my competition is the fact that we know where prices are at, because we're talking about, if I'm doing an appraisal on a Monday or to a Wednesday, I'm talking about what happened on the weekend, because sales 2 months ago or a month ago are no longer relevant. So
yeah,
that really helps. Yeah, I encourage anyone to go
Ash,
out there and go get a buyer manager, go get some admin support, because this is a market where you can justify it.
how big's your team now, Ash?
We're a team of 4.
4. Okay. And you started with me 4 years ago and it was just yourself.
Correct.
There you go. So that's what you can do in a short period of time, writing over $1 million or knocking on its door, but doing over, over 100 deals and actually, north of 150 if you want. And Ash, just last question, your capacity now with 4 people, what do you reckon that would take you to if the market did continue to kick? What numbers could you do?
I think we can get to about between 200 to 240.
Wow, that's massive. That's absolutely massive. Well done, mate. Huge. Round of applause for Ashley, guys. That's great input. Thank you so much. Anyone else want to comment quickly on the market before we move on to the results for December? Anyone experiencing a challenge in their marketplace? Any challenges in the marketplace other than low stocks? No. Okay. Well, let's push on. Let's not